GM everyone, and welcome to Smart Contact, an interview series with the world's most influential and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle, our 2024 lead sponsor, and by Invest Hong Kong, co-sponsor of the Smart Contact series at Blocktober. Like and subscribe for more Smart Contacts.
Welcome to another episode of Smart Contact, produced by Web3 Harbour and powered by our sponsors, Invest HK and Circle, our 2024 lead sponsor. I am Tchui, co-chair of Web3 Harbour's Enterprise Subcommittee, and I'm your host today. We're recording with a live audience, and today's Smart Contact is with Charles Haussy, CEO of dYdX Foundation, a true pioneer in decentralized finance, who has been in the forefront of evolution and growth of DeFi. Thank you so much, and I'm going to enjoy our conversation.
Thanks for having me, Jeff. How do you feel about Blocktober? It's a very busy week here in Hong Kong, and I feel we are recording on a Monday, and already my morning was packed of good reunion with old friends from Hong Kong and builders from Hong Kong, and also very excited to be here for the week. A lot of things happening on the fintech side, and more importantly, we're going to touch on this on the Web3 side. So super excited to be here. Thanks for having me.
Thank you so much. Blocktober has been a great initiative by both Web3 Harbour, sponsored by Invest HK. It's the culmination of a month full of events to really promote Web3 for Hong Kong.
A Web3 marathon, I love that.
Yeah, exactly. Thank you so much. And speaking of that, we just got back from Hong Kong FinTech Week.
We did.
Yep. And there, senior leaders and policymakers have reinforced Hong Kong as a hub for innovation in both blockchain, Web3, and artificial intelligence. The region's overall support and clarity for some of the regulations really make it a thriving place with our technology background to really drive the adoption of Web3 in the region. However, we are also at the cusp of East and West, East meets West. You had previously coined a phrase, splitternet.
Yeah.
How is this important for the Web3 adoption, and what does this actually mean for Hong Kong in the future?
I did not coin this word. I must have read it somewhere. But I think in the world of Web3, the industry is now maturing. We can see a lot of people making a lot of efforts to try to get adoption for the different applications built on blockchains. Should it be layer 1, 2, 3, or AppChain? And when I try to take a bird view from how the internet has been evolving, and I'm old enough to remember the very early days of the internet, what I see happening, and it's happening first in Asia, to be honest, is essentially the splitternet. So the internet is like one global internet, like so to say one layer, and the splitternet is more some kind of illustrative way to explain how the internet is becoming some kind of walled gardens. And if you look at Asian users, many of them are spending much less time on Google Chrome and more time on WeChat. And WeChat helps you to chat with your friends, to book a taxi, to pay for a restaurant, to do everything. So essentially the number of hours spent on the internet is growing, but people don't spend their time on the same kind of vehicles to consume the internet. And I think these super apps, and maybe soon super dApps, are the future of distribution for Web3 products. So the Chinese are on WeChat, the Korean on Kakao, the Japanese on Line. The world is about to discover the power of Telegram and the Telegram blockchain, where everything will be kind of deployed there. So I think it's very important for people in our industry, maybe not to, at least to reconsider how you want to promote and distribute your digital asset services, and thinking that maybe you should not be spending so much time on bringing people to your shop, should it be a .com or maybe an app on Android or Apple, but thinking where and how you should be bringing your product where the users are. And that's where it comes to this illustration of the splitternet. And basically, you need to be where the users are, you need to be on WeChat, or you need to be consumable on Telegram or online. And I think that's very important for many projects and entrepreneurs in the space to rethink a little bit how they deploy resources, how they deploy energy to bring and attract users to their platforms. In the world of crypto, some people can use incentive and you can get like yield and token farming and all these things. But if you come back to first principles, you should be thinking how the internet is evolving, how the distributions on the new internet is evolving as well, and how you can adjust to that.
So I want to double click on that. Yeah?
Mm-hmm.
From the context of Hong Kong, is this a threat? Is it an opportunity? How do you see the split internet creating different ways of handling this? Hong Kong being at the forefront of the Greater Bay Area, and again, like I said, that the comedy of a multipolar world of East meets West.
Crypto finance or digital asset finance is essentially an evolution of finance, right? I don't think the market kind of framework and the user's habit, more importantly, will change so much. The technology is exciting, but the people are not moving so quickly. So I think if you want to look and if you want to predict what will be the world's largest crypto hubs, you can probably see an overlap with the existing finance hubs. So I foresee New York to be a crypto hub, and I think they are already today. London is doing quite good as well, because they also already have like this traditional finance industry foundations which are around. So, and all these TradFi players, as we call them, are looking at expanding and leveraging the crypto or the blockchain technology. And Hong Kong has a very, very big role and a very big opportunity here, given the kind of the power of the flow happening in Hong Kong, the number of IPOs in Hong Kong, the number of banks in Hong Kong. You can look at the numbers; it's just mind-blowing. It's just like so ahead of everyone.
I think this morning's address by the finance minister, it was 10 times GDP in multiple different aspects of that specific number.
And as a former government employee, I know the numbers, and maybe they're a little bit outdated, but like 300 IPO here or so,
yeah.
160 plus banks, 160 plus insurance companies. So I guess the point here is there is a very strong foundation, a very, very good ecosystem of finance. And as we see from the central banks with the support of the HKMA, support of the SFC, support of the governments here, we need to give it some time. We need to give them also guidance, and I think this is why the government here is trying to be in touch as much as they can with the industry practitioners to understand how the industry is going, and making sure that essentially the existing kind of championships of finance happening here in Hong Kong get the opportunity to upgrade to the digital finance.
So from Web3 perspective, now we're moving into the topic of today, which is DeFi, derivatives. What is DeFi? Who is it supposed to be helping? What is the problem statement that it's designed to solve? And specifically, we'll end on this last one. How has it changed in terms of the problem statement that it was targeting versus what DeFi has become and evolved to?
So DeFi is essentially an evolution of CeFi. So DeFi stands for decentralized finance, and CeFi stands for centralized finance. To kind of illustrate those two concepts, the champions of DeFi will be companies like Uniswap or dYdX, or some others in lending, for example, like Aave. In the world of CeFi, the champions will be Coinbase, Binance, and many others. So those companies in CeFi operate in the crypto industry, but they operate in a very centralized way. So essentially, they have one company, one server, and they serve millions of customers. So the infrastructure is very, very traditional. The assets are new type of assets, crypto assets, but their infrastructure and the way they operate is very much like a bank or like a fintech. On the other side, at the opposite side of the kind of spectrum of evolution of finance in general, you've got thousands, if not millions of people experimenting in DeFi, decentralized finance, where the infrastructure changed totally. It's not a centralized entity anymore. It's not a centralized server. It's not a centralized database anymore. Essentially, finance start to be working and functioning very well, very strongly on distributed type of computing, where a smart contract will essentially encode business logic. So if I send you one stable coin for $1 Hong Kong, my account should be minus $1 Hong Kong, and your account should be plus $1 Hong Kong. So crypto finance is evolving very much. You've got the pioneer in crypto finance, which are coming from the CeFi space, but this industry is kind of moving and evolving to DeFi, where most of the transactions will be happening on decentralized network, which will be operated by general validators or many others. The value proposition, I think, from DeFi was more coming from reactions to some of the weaknesses of CeFi. So if you look at centralized exchanges, the first one coming to mind is Mongox, which got hacked. And when you send your assets to a centralized entity, essentially your asset becomes a property of the centralized entity. When I send my money to HSBC, my money belongs to HSBC until I claim it back, right? In CeFi, it's basically leveraging the power of smart contracts, the power of decentralized computing to say, okay, with the beauties of cryptographies, you can design a smart wallet and essentially still have the ownership of your assets and not lose them unless you lose your private keys. So the recent example of the FTX collapse, a very large centralized exchange, just illustrated again for the whole market overall that these centralized entities have weaknesses. They need more licensing, they need more surveillance, but they need also like better infrastructure. The software is wrong. Like how come you give all the money to someone and this becomes some kind of honeypot, right? So DeFi came with the first value proposition saying, okay, you're going to remain the owner of the asset and it's going to be non-custodial whenever you're going to come and use different services. And from there, from this kind of non-custodial first value proposition, many other propositions came in with additional services in finance, kind of new kind of flows in finance which were able to generate more value. So think of the crypto lending, think of perpetuals, which are futures contracts which can update themselves every hours. And I think yes, the value proposition of DeFi becomes more and more stronger by the months. But it's also some kind of new product, so people have to kind of embark in DeFi. My prediction is that many people will start using DeFi in the coming years or months without even knowing it's DeFi. A little bit the same way you see central banks here in Hong Kong and some other places building CBDCs, but I think the users will not even know it's using blockchain, and maybe they should not know. How is WhatsApp working? I have no idea, and I have no time for you to explain to me. I just want it to work, right? Yeah. And I think this industry will go, of crypto in general, is very technical today, but it's just accelerating on becoming just ubiquitous and used by users in a very simple way.
Sorry to interrupt the video, but I want to tell you about our 2024 Smart Contract lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers,
and the US dollar meets USDC.
Meet Circle.
We also want to thank our Smart Contract at Blocktober sponsor, Invest Hong Kong. Thank you to all of our sponsors and community partners. Now back to the conversation.
So I want to actually ask you about a few numbers. And specifically, it's 235 billion US dollars, 145 tradable markets, 215 million US dollars in open interest, 38 million USDC in rewards, and over 45,000 holders of the dYdX token. How much of this is real metrics? How much of it is AI-driven bots, algorithms? And specifically, what is your secret sauce? Like, why has it grown so much? And let alone, these are figures and numbers that have been within 12 months. So, please.
dYdX is specialized in crypto derivatives since 2018. Since 2018, dYdX did three things: crypto derivatives, and crypto derivatives. So we are hyper specialists in one thing, and we are a series of team which is very long lasting with a very high standards, very good reputation, very big brand. dYdX has two sides of its history. dYdX started on Ethereum. We were one of the earliest adopters of layer 2s on StarkX, on Starkware. So on the Ethereum side, dYdX over its 3 years of existence on Ethereum recorded 1 trillion with a T, $1 trillion of trading volumes. About 18 months ago or so, the pace of growth for dYdX was so strong that sitting on a general purpose blockchain was not something which was very practical for the engineering team. What I mean by a general purpose blockchain is when you sit on Ethereum, or if you sit on Solana or anywhere else, any layer 2 is the same. You get to sit your application and build it on something which is some kind of a Swiss knife, like a tool which is good for many things but not really specialized in anything neither. And with the application of dYdX growing, eventually the decision was made by engineers involved to build our own blockchain. So the dYdX chain came to existence about 1 year ago. That was late October last year. And in the past 12 months, we recorded $235 billion of trading volumes on the chain. So what it means is that the app chain narrative, which you might have heard in the press or on Twitter.
Can you talk a little bit more about the app chain narrative?
Absolutely.
Yeah.
So the history of the technology of blockchain started with Bitcoin and maybe some other protocols before, but Bitcoin really make it kind of taking off. And then came Ethereum with business logics and smart contract capabilities. But all of these blockchains usually come with multi use cases. On Ethereum, you can do NFTs, you can do data availability, you can do DeFi, you can do anything you like. There is so many different kind of projects. But the platform is kind of good for everything and not so good for very specific use case. So the industry has been growing over the past years. And some applications, such as dYdX, became sizable enough to start to think we cannot sit on someone else's infrastructure. We cannot sit on an infrastructure which is good in everything because it does not exist. And we have now the capabilities and the critical size to build our own infrastructure. So this is what we call an app chain. So an app chain is a blockchain. It's a layer 1 blockchain, but dedicated and designed and fine-tuned to be really highly performant for one use case, the use case of the app. So in the case of dYdX, the app is essentially a DeFi protocol dedicated to crypto derivatives. So the blockchain built by the engineers has been really is a Formula 1 of DeFi essentially. You cannot do NFTs; it's not available. You cannot do many things. You can only do high performance crypto trading. And to come back to the numbers, those numbers are impressive. They illustrate the size of the crypto derivative market. And I think that's very important for everyone to capture that. Yes, the trading volumes on Binance Spot or the trading volume on Uniswap, there are this kind of this type of trading which we call spot trading. So spot trading is when you buy a coin, when you buy a token, and you own this token at the end. In a similar way to the equities market, besides the spot market, there is also the derivative market. And we find exactly the same pattern as we find in equities. Essentially, the crypto derivative market is 10 times larger than the spot market. So every time there is someone buying and selling an Ethereum token or maybe a Bitcoin, there is tens of these tokens which are essentially traded on the derivative market. So that's why this market is very important. That's why this market is very sizable. And to come back again to your questions, today about 80% of the trading volume on dYdX is happening via API. So it's definitely a market for institutions. It's a market for very sophisticated traders which are designing trading bots, designing arbitrage strategies. Some of them might be using AI. This is where the capital market is the most efficient globally because the competition on this market is extremely high. For high competitions and very sophisticated traders, the market is always after like high performance infrastructure. And this is what the dYdX protocol provides.
I actually commend you on starting a layer 1 protocol. Me personally, I was with a layer 1 protocol for quite some time and understanding the complexities of what, as you're part of the foundation, and other organs or parts of the ecosystem. Can you talk a little bit more about how dYdX is structured? And then specifically, what makes it unique compared to your peers?
So dYdX is focused on crypto derivative for a very long time. So this focus pays off because it brings a clear identity on the market. Today, if you look at the decentralized version of dYdX, which is a dYdX chain, there is dYdX Labs, which is operated by Antonio Giuliano, the founder of dYdX, with about 60 different engineers working on backend, working on the order book, working on the performance of the protocol. This entity releases open source software. This open source software is then deployed by validators. So there is about 100 validators or so today. 60 of them are in what we call the active set. So they are essentially bringing to life this open source software, which is the dYdX DeFi protocol. Then there is the foundation. I lead the foundation. We are about 20 people. We did a fundraise of about $30 million earlier this year in 2024.
Congrats.
So that's an interesting exercise. Many people ask us, can we invest? Like, you cannot invest in a foundation. We are non-for-profit. We don't make any kind of transactions. So we essentially rose this round with the community. So the community made a donation to the dYdX Foundation. So we could help with governance, we could help with strategic BD for the protocol, we are helping with marketing in general, we are helping with different topics around the protocol itself. So 20 people financed by the protocol. So via governance vote, the 45,000 token holders decided to kind of give a blessing on the business plan presented by the foundation team and fund us for the next 3 years. So besides these two entities, you've got 3 different DAOs. DAO stands for Decentralized Autonomous Organization. So essentially they are kind of, so to say, a limited company, but organized and built on the blockchain only by the token holders. So the first DAO at dYdX was the Grants DAO. So when you want to build on dYdX, when you have a project which is meaningful for the protocol, you go and engage with the dYdX DAO, with the Grants DAO, and they will assess your project and give you some funding so you can start to build additional plugins, additional services around the protocol. So the dYdX DAO is a team which has been built with the community. So it's a community-run type of initiative, and they've been distributing $5 million over the past 6 months to 47 projects, which are, I will say, aligned with the vision and the mission of dYdX itself. Next to it, the next DAO is a treasury management DAO, which was created a few weeks ago.
It's new, right?
It's a new one.
Yes.
Decided by the community again, managing millions of dYdX tokens, staking them, and trying to generate some additional revenue for the protocol itself, for the series of smart contracts.
Can I ask, what is the difference? And I'm extremely curious about this because I'm
Please.
a protocol guy. What is the difference between a grant DAO and a treasury DAO?
They do very different things. So the Grants DAO distribute money to projects building on dYdX. The treasury DAO manages essentially the asset of the protocol. So the 45,000 dYdX token holders have essentially a right of say on where is the protocol going. But the protocol itself, the smart contracts themselves, owns millions of US dollars of value. And the treasury DAO has been created by the community to manage those tokens and put them to work rather than having them just standing still.
Got it.
The last DAO, just to conclude on the DAO side, the last DAO is a dYdX operation DAO, which is running some core services and doing some works with the validators. And they are, to the best of my memory, 6 people full-time. They also were created by the community and funded by the community. They just got an approval for $23 million of funding for the next few years.
Thank you so much for explaining that could be complex structure and demystifying that for all of us. So that's the internal innovations, I would say, maybe at dYdX. What are some external product service-driven activities that have evolved over the last 12 months after you've launched the dYdX chain? And actually, I was looking up, and congratulations. I think the transactions on the version 4, which is basically the Cosmo SDK-driven one of your chain, has now surpassed the previous Ethereum version 3.
Absolutely.
So congratulations. So just curious, from a product service level perspective, what are some innovations, and what is dYdX Unlimited?
So the upgrade of dYdX to the dYdX chain has enabled a lot of innovation. It has enabled the team of engineers to essentially deliver on the vision of dYdX, which is trade anything. We can touch on this a little bit later. So what happened over the past 12 months or so, 11, 12 months or so, dYdX used to be on Ethereum with 37 trading pairs. Now, being decentralized and sitting on the dYdX chain, there is more than 145 trading pairs. So the token holders and the users have been able to essentially guide the protocol. I want to trade these new assets. I want to trade FX. I want to trade new meme coins. I want to trade new trading pairs in general. So there was an acceleration in the number of trading pairs. Also an acceleration in terms of liquidity. When you're in the world of DeFi, one of the core metrics and the core secret, I would say, to success is to have enough liquidity. So whenever people wants to come and express their opinion on the market and place a trade, should it be a short or long trade, you want to have liquidity. So it's easy to get liquidity for the top of the order books, the Bitcoin, the Ethereum, the Solanas of the world. But then you have a long tail of assets which will have liquidity coming in and out and sometimes not very stable. So building the dYdX chain has enabled essentially to build much faster innovation and implement it way faster as well, and creating some kind of flywheel. So the community is, for example, discussing right now how part of the fees collected by the protocol could be reinjected into the liquidity vault, which has been built by engineers at dYdX. So it creates some flywheel, and it creates some opportunities to just go faster. Another example of innovation is, and I think this is the secret of DeFi, if DeFi does not create its own opportunities, if DeFi does not differentiate itself from CeFi, DeFi will probably keep struggling, right? Yeah, so you don't want to be at par with CeFi and the Binance and the Coinbase of the world. You want to create your own game. You want to create your own kind of playground. And this is where open source software and pace of innovation is very important. And by having the dYdX chain, it enables us to release innovation much faster than the large type of organizations, such as the centralized exchanges, for example. The example which was launched by the protocol a few weeks ago now, you know that the prediction market is getting some kind of rebirth. Mm-hmm. Prediction market is a way for people to essentially bet on real world events. And Polymarket is the biggest marketplace for that today, where the US election is basically a topic for many people to bet. Will Trump or Harris win the elections in the coming weeks? So what we did at dYdX, since it's a very much a composable type of industry, we saw that we could actually create a futures contract on the top of someone else's product. So the users of dYdX now can essentially use a perp to essentially express their opinion on a prediction market from Polymarket. So if you bet on Polymarket, you have to wait for the event to happen to know if you won or lost your bet. With dYdX, we've wrapped it into a futures contract, and you can go long or short into a specific contract. You can get some leverage as well. You can take some profit off the table the closer you get to the finality of the outcome. So this is this kind of innovation which is enabled by the dYdX chain by being much more open source and much more open to essentially inputs from users or inputs from co-builders.
So interesting you bring out the perpetual market in the context of predictive markets as well, or the prediction market. At what point does this end up being gambling, and what point is it financial services innovation? And does this really mix with regulation? Like, is this something that regulators would be really interested in looking at?
The frontier between gambling and investment is defined by many different people, should they be regulators or people. If you take a futures contract on the Hong Kong Stock Exchange, is it gambling or investment? If you go to the Happy Valley on Wednesday for horse track, is that pure gambling? Probably yes. So there is definitions of kind of people expressing their opinion on a future outcome on financial market or maybe on horse races. So that's more defined by the users, by the regulations overall. I think what we are really looking at dYdX is thinking how can software and innovations can bring kind of revival into these old schemes. Are the regulators paying attention? I think they are. Regulators are very engaged with the industry, and I think it's part of our mission and part of our responsibility, more importantly, for DeFi practitioners, not to claim that DeFi is great or DeFi is better, but to demonstrate. And what you find out if you look very carefully and diligently to decentralized finance, you find out that the overlap with regulator is just obvious. Regulators want to have safety for the asset of the users. On DeFi, by definition, the assets are held on non-custodial wallets, on smart contracts. The operators or anyone cannot access this besides the users only. Regulators want to have healthy marketplace. So if there is an exchange or a platform for trading, making sure that this platform is healthy. No one is front running, no one is getting more information than others, for example. In proper DeFi, by definition, this is totally visible to anyone. So there is a lot of things we should be doing as an industry to keep educating regulators, and I think they are all ears open to understand how this industry is working and how it should be regulated maybe at some point. Should it be at the technology level? Should it be at the operator level? Just making it understanding better. But if you look carefully, I think every month regulators and central banks are giving a blessing to the technology we are working on. If you look carefully what the BIS is building, if you look carefully at what all the central banks are building, like 100% of them are working on CBDCs now. Most of them are working on open source software. Should it be a special instance of Ethereum, for example, or some other things. So there is a much better understanding than people think by regulators of DeFi, and I think it's our role to stay engaged, keep explaining. But eventually, DeFi provides to regulator, I think, many things they're looking for to implement. But it's not always easy when when crypto is operated into a centralized database. Like what's happening in the order book of a centralized exchange, only they know, and the users will never know. What's happening on dYdX or some other DeFi protocols such as Aave or Uniswap, it's visible for anyone to check every second. So this is just a way better, I think, way to do finance, and the agendas are overlapping. So I'm very confident that things will be fun to make things working.
Can I just challenge you just a little bit on that one? How far away are we actually from this? Because I've been hearing about Singapore wanting to have its own layer one for the regulators to actually have access to financial markets, participants. There has always been a conversation with institutionals not being very comfortable with fully public permission chains. Is this a transitionary process that we need to go through? Or do you think that regulators, you should have a separate sandbox or a different approach towards how you manage DeFi? Or is this a step-by-step process that we just have to go through from an evolutionary perspective?
Jeff, the history is written. We just have to go through each chapter one by one. The internet back in the 90s was built out of intranets, and everyone was thinking it's safer for me to work with my vendors and my partners on our own intranet. Mm-hmm. And then eventually, like, no one is working on any intranet anywhere. The early versions of the CBDCs or securities project from big banks or central banks were on intranet as well, and now they're starting to open to global networks, right? So I think it's just an evolution of the technology, and what we've seen and the path of regulations for Web 1 and Web 2. I don't see why the path will be different for Web 3. Maybe just a little bit shorter in time because things are moving faster nowadays. But it's just going to take time for regulators to understand that you cannot regulate Bitcoin. I think they understood now. You cannot regulate Ethereum. It's a technology. You can regulate the operators on Ethereum, but you cannot regulate the technology itself. And the same is happening for DeFi. Like, how do you want to regulate just smart contracts? They are just autonomous, and they are a technology play. Can you have a conversation with operators in different countries to make them comply with regulations from Asia or regulations from other places? Probably yes, but that's just a cycle. But what's going to happen is eventually everything will converge into public networks. This is where you get the best distribution, and the best distribution wins. Taobao is an illustration of it. Amazon is an illustration of it. It's just the fundamentals of business. But it takes time. It takes time for the technology to mature. It takes time for the use cases to mature also. Sometimes a good idea takes time to be fully operational. And then you have the kind of inertia from large organizations such as governments, central banks. But they are working in the same direction as us. Stablecoins is challenging money from central banks. So central banks are working on CBDCs. You look at BIS works, you look at the green bonds, you look at a lot of things that are happening. And all of this is using the same technology as us. So they usually start in an intranet and eventually go to a better distribution with public networks.
So with all these trends, what is, I'll go back to my earlier question, because I think maybe we didn't cover that one properly. What is dYdX Unlimited? And how does it actually address all of these trends potentially that you could benefit from, whether it's regulation, market, or even community driven in terms of the structure of your protocol?
So dYdX Unlimited is the next upgrade of dYdX chain. So it's going to enable permissionless markets. So people will be able to list all kind of assets. There is some kind of restriction. There is a risk framework. There is some kind of guidance also, which people need to follow. There is also technical restrictions. You cannot list things which don't have a price, for example. But essentially, it's delivering on the technology side for this vision that the market wants to trade anything and offering this infrastructure. Second part of dYdX Unlimited is the dYdX Vault, the liquidity vault. So essentially, part of the protocol, there will be a vault which will be a systematic market maker providing liquidity to the most important trading pairs at any given time within the 150 trading pairs order book of dYdX. Then there is also some technical upgrades such as a full node as well as a prediction market, futures, so perps on prediction market to get leverage on it. So that's in a nutshell the biggest upgrade, which is just a few weeks ahead of us, already in testnet, so it's just within the testing process now. But this is what dYdX Unlimited means. It's unlimited liquidity to a certain extent, at least liquidity on a very large number of trading pairs, and also the capacities for users to make tradable and list on dYdX many different things. In a way, very similar to what Uniswap did for the spot market. So today on Uniswap, you can list any token and bring liquidity to this new market. We are doing a similar thing on dYdX for the crypto derivative market with an order book type of exchange architecture.
Your partnership with Solana, and how is this tied into meme coins being used as a collateral asset on dYdX? And specifically with your just this most recent explanation, how is that connected to trade anything anytime, and then with permissionless listings?
So that's why DeFi is very interesting to me as an industry to work on. You can be a composable business. Composable business is you can build new offers with someone else's offers, and you don't need a partnership for that. It's permissionless. If people want to build with dYdX or on dYdX, it's permissionless. They're welcome. So what happened with dYdX and Radium, which is one of the spot exchange built on Solana, essentially dYdX now made tradable more than 800 different meme coin markets and some other coins from Solana on dYdX. So we bring to dYdX adjacent ecosystems. So historically our industry is very tribal. The technologies are kind of creating some gaps between different communities, and you need to use a bridge, and it's just very complicated. With the technology evolving and some kind of laser focus on our products at dYdX on the perps, we're essentially able to kind of bring other assets to the dYdX protocol to be listed and tradable by users. We're about to do the same thing with Uniswap on Base, the blockchain from Coinbase. So there is just a lot of technology available to simplify the user experience and making sure that in one venue they get as much access as possible without having to jump on a bridge and do all kind of things.
Is it your intent that it starts off in dYdX to get the first listing and improve its valuation, and eventually these projects will go back to a centralized exchange, or do you expect them to stay on DeFi after its listing when it comes to the permissionless offering? Because you know why I ask is I'm putting my regulator hat on, and it seems risky, where the controls that are put in place that we have today for multiple different asset classes being listed on centralized exchanges are there for a reason. And so can you reassure the regulators that this is not something that is another ICO 2.0?
So DeFi is not ICO. I mean, you can use ICOs, you can use DeFi to do ICOs, but DeFi is a very structured industry now with lending players, with crypto derivative players, with spot players. DeFi is used. Without DeFi, probably a lot of the CeFi will not survive today. There is a lot of innovation happening on-chain, and eventually these on-chain activities or tokens find their way to centralized venues. So eventually, I think these two spaces will kind of migrate. If you look at, again, I come back to the distribution. It's a very boring topic, but it's super important to get this kind of framework whenever you build strategies and roadmaps. I believe people will not change so much, even though crypto can offer all kind of new initiatives or new flows. People don't change. So people want to go to one venue and get everything they can in one place. When you look at the history of centralized exchanges, they are in a global race today to acquire licenses. So they get a license in Hong Kong, they get a license in Europe, they get a license here and there. For the vast majority of these licenses, those licenses are only for spot. So what it means for a user, if you were a user of an exchange in Hong Kong or somewhere else, you could be doing within this exchange, buying spot, but you could be doing also lending, futures, and different services from these crypto centralized exchanges. When they acquire a license, they can only do one activity. So usually they tell you have to stop this, stop this, stop this. You can only do that now because we got a license. So it brings you more certainty, but it also removes a lot of the proposition from all these players. So what's happening in the world of centralized exchanges is all of them are building a decentralized custodial wallet to essentially facilitate access to their users to the outside world, to facilitate them access to buy NFTs on OpenSea, to go in DeFi, lending, or trading spot. So I think eventually these centralized exchanges will be gateway to DeFi, because this is where there is more offers and more product and better and more competitions, I will say, for the product themselves. And it's not going to be so different from a bank. If you look carefully, your bank in Hong Kong, their core business and their license is for essentially the saving accounts. So you get paid every month a salary in fiat, you get this salary into your bank account, and then your bank come to you and say, oh, do you want to trade on the stock exchange? And they use a prime broker to give you access to the stock exchange. And then your bank tell you, Jeff, you should have a life insurance. Then they go and speak to an insurance company and bring you a life insurance. So it's a long way to explain that today the way traditional finance is distributed is essentially it's working via aggregators. And those banks are aggregators for the most part. Very few of them are also an insurance company. And I think in the world of crypto finance, I don't see why this model will change so much, because it fits very well as the people. It fits very well as the regulators to kind of understanding and segregating different type of activity. If you're a custodian, this is the way you should be operating, and you should be specialist in custody. If you're a lender, you should be doing things this way. So I think the infrastructure around finance is changing 100%, and there is no way back. So it's going to be crypto or crypto technology related, should it be a CBDC or a stablecoin. But the way it's going to be distributed will be very similar to what we have today. So I can foresee a future where a customer of a centralized exchange will essentially use a centralized exchange for fiat on-ramp and off-ramp, trading spot. But also the centralized exchange will tell them, oh, if you want to do some lending, we can give you access to an online lender. And we're going to take care of all the pipe connections and the bridges and all these things. If you want to go and have access to crypto derivative, maybe we're going to do a risk profile of you, and we're going to just assess if you're ready to go for the derivative market. And if you are, we might give you full access or partial access to derivative. The same way HSBC might be selling to me crypto derivative product after doing a risk profile of myself. Like, Charles, are you adventurous enough to go in the crypto derivative market? So I think these two markets of DeFi and CeFi will go together. And I think one example, which is like pure public data, on the dYdX chain, some of the validators are Binance, OKX, Coinbase, Hashkey.
Mm-hmm.
So we can see that people from the industry in crypto CeFi or crypto DeFi are not afraid of each other. We all know that there is so many things we can build together, and they are part of the dYdX adventure. And we are also, in some cases, listed on those centralized exchanges also, and they enable their users to use dYdX in a certain way, at least deposit assets.
Thank you so much for really explaining that. I want to now focus our time on the people side of DeFi.
100%.
And as we know, you can't really build this transformational exercise without the right talent. Can you talk a little bit about your personal journey and then how that relates to, let's say, in the listeners that we have today, both young and old, if they want to get into this transformation, this opportunity within DeFi, how do you actually get into it? And what are some of your recommendations to actually get
so
there?
you're definitely right. This industry, at least for me, is interesting because of the people. People in crypto in general are, for the most part, very curious, and curious people are interesting people to hang out with, because you're curious about something, I'm curious about something, we're going to teach each other something else, right? I think for my personal journey, most of my career was in Hong Kong, to be honest. Hong Kong has been extremely generous with me, gave me some great opportunities, and I put the work to make the best of those opportunities, like many others around in Hong Kong. So I started as an entrepreneur here in Hong Kong, started my own company here, easy, quick, very fast growth. Long story short, my largest customer wanted to acquire the company, so he acquired my company. I became a shareholder of his company. We went IPO later on in France, but I stayed in Hong Kong. And after the IPO, a few years later, I decided to I wanted a change in my career, and Hong Kong has so many things to offer. I had a sense for finance for quite some years, so I went into fintech. Here we go. And I started with one of the first fintech here in Hong Kong. A little bit of time later, I joined the Hong Kong government, which was building a fintech team. So I found it was very interesting and something which was very close to my heart. So I joined into this kind of entrepreneur journey within the Hong Kong government. Believe me, it was hands-on, and that was a lot of fun. And I met some great people, and we built some amazing things. Among them, the Fintech Week, which is happening this week. And later on, I wanted to kind of double-click on something which was very close to my heart, crypto. I just like crypto. This is all I like to do. So I went with Consensus. I started the Hong Kong office here. Then I took care of Asia for the founder of Consensus. We did some DeFi, we did some custody, we did some MetaMask growth, we did some CBDCs.
CBDCs, yes.
We, together with the Hong Kong team, we built more than 6 CBDCs in Asia, from Australia, Hong Kong, Singapore, together with China and many other places. So that was just an amazing journey. And eventually I wanted to keep diving and keep building specific knowledge and keep going deeper into the topic of crypto. So I decided to join the dYdX Foundation to essentially build very advanced DeFi, truly decentralized DeFi, learning by doing, co-building DAOs with the community. Yes, and so far it has been an amazing journey. And if people want to start in crypto, so you need to like the technology first. You need to consider and be aware that the crypto industry needs a lot of talents, and not only engineers. There is space for lawyers in crypto. There is space for marketers in crypto, for BD people in crypto. I would say just get started. That's number one. Don't overthink too much. If you come from traditional finance, there is a space for you in crypto. But very quickly, you should be building a specific knowledge again. You should be a specialist in something and not becoming like a general crypto exec, because it's very easy to get kind of commoditized if your knowledge is not specific enough. DeFi is probably a good topic, and I'm sure DeFi will keep doing well here in Hong Kong, because this is a financial center. And maybe just some more classic advice is choose your boss. Choose a boss which wants you successful. And there are many of them, but sometimes you have to be a little bit picky. And just keep learning and keep practicing crypto also. I think you need to put your hands on, so during the interviews people will understand, like, okay, you really into the space. You want to go even deeper by taking this kind of turn in your career. One question I often ask to candidates is, tell me about your crypto toolbox. What I want to know is what kind of crypto tools do they use? Are they a Binance user only, or are they doing also some MetaMask? Are they buying NFTs? Where do they buy NFTs? Like, tell me what you do. And just by looking at the toolbox of anyone, you will know what kind of craftsman they are, right? So it's a good way for me to kind of assess. So just get your hands dirty, play a little bit with the different tools and the different protocols in crypto, and you'll find your way. There is a lot. It's a very fast-growing industry, and if you ask me what is constantly top of mind for me as a CEO of the dYdX Foundation is talents. Liquidity, there is many ways to solve it. We have many challenges all day long, but the talent is a kind of recurring challenge. Do I have enough talent in my team? Does the ecosystem of dYdX have enough talent? Are we attractive enough? Are we understood enough? Are we branded enough? Do we have enough headhunters who understand the dYdX ecosystem to send talents to the different entities? That's very, I would say, normal for any CEO, and talent is probably the most difficult challenge. So there is a very big demand for talents in our industry, yep. And we just need the people to kind of jump in and start from there.
So you heard it. For all listeners out there, it is not too early and it's not too late.
It's never too late.
And with that said, we are today out of time. I wish we had more time to cover the multitude of various different topics around DeFi as well. Thank you again.
Jeff, one last thing.
Yes.
If our auditors wants to know more about the ecosystem and the history of the ecosystem of crypto in Hong Kong, I really invite them to download on Amazon, or they can go also to some bookshops here in Hong Kong. To buy this book, I've written with my good friend Jem DiBiaso, which is also the chief editor of Tchui. The book is called Blockong. It's available in English. It's available in Chinese as well. It's 21 breakfasts with 21 different crypto entrepreneurs all over the city of Hong Kong. So it allows you to discover maybe new restaurants and also discover the personal journey of these people. And your last question was about how to start in crypto. And I cover in those interviews a lot of different personal journeys, which I really invite everyone to read. It's just a great illustration of how this industry has been strong here in Hong Kong. The perps, which is a core activity for the dYdX protocol, has been invented here in Hong Kong by the co-founders of BitMEX. There is so many things which have been and are happening here in Hong Kong, and the books was released I think in 2021, so it's aging a little bit now. But it's always good to learn from the OGs, so to say, so you can build something even more meaningful.
Amazing. And I hear you might be also working on another book?
Yes, it's a long journey. So I have something in mind, and whenever I'm not thinking too much, I'm trying to put some draft. But yes, I'm working on another book.
That's wonderful. I have read this book, and I actually got a copy of it the day it came out at Hong Kong FinTech Week in 2021. Yeah. And so thank you so much. Thank you for tuning in to Web3 Harbour Smart Contact Series at Blocktober Series this week. And today, thank you for finishing, and we'll see you next time. Thank you,
Jeff.